Hey everybody. All right, so let's take a look at um, the markets over the last week or so here. I got the S&P up here, and we're showing how after topping out here the SPY at 478, you can see how in math we would call this curve here decreasing at an increasing rate, right? So it's just accelerating down. When you see something like this over here, if you look at it long term, it's kind of it's decreasing at a decreasing rate, which means it's going like this, like a cup. Here we're still just dropping like a brick. So what is that telling me? So talk of the Federal Reserve raising rates, not good. And on my previous videos, like I mentioned, all of this stimulus coming out of the economy at one time is just going to be, absolutely brutal for the markets. I mean, all that money the last 2 years went somewhere, and it went here. Okay, so if we look at a 5-year chart of the S&P, okay, and you look back to, so right here, this is the crash related to COVID, okay, but if you draw a line through this thing, okay, and I try to draw a line, like here, and kind of through the average of this, okay, and you've heard me in my previous video talk about the central limit theorem, okay, that theorem didn't go away just because the Fed printed a bunch of money. It would go away while the Fed was printing a bunch of money. But as you can see, mathematically, if the central limit theorem holds up, we could retrace all the way back here to 360. I mean, now over time, okay? And, time goes on, markets come and go, liquidity comes and goes, Great Resignations come and go. That's something we'll talk about here in a few minutes. But this massive liquidity bump from the Fed and the government putting so much money in the system the last couple of years, the balloon is being deflated. And with that is going to come a lot of things. The wealth effect of most people will really start to erode, unless they liquidated, somewhere here at the top, or maybe they liquidate here even before it drops a little more. And again, I'm not a financial advisor. I've just been watching this stuff for years, and the way this is starting to play out with this, you see this slight bend, right? Okay, up, up, here, high energy down, high energy up. Okay, COVID, Fed. Okay, Fed, no Fed. Okay, so I personally think that we could easily get the SPY under 400 here and maybe get a little recovery, but just like in 2000 when NASDAQ went from 5,000 down to 2,000 over a year and a half, depending on what goes on with inflation and the Great Resignation, these things can start to really continue to accelerate down. And that's with anything that is risk on, right? Bitcoin, cryptocurrencies, tech stocks, especially like the cloud stocks. So we're going to have to watch that. Now, I guess a good news is if you look at volume here, this selling isn't outrageous volume, right? This is just selling and some stuff turned over. Here we saw selling with 2 to 3 times the volume we usually do. So we don't have a lot of like true panic. These volumes are about the same. But we do have people dumping out of that very risky assets like crypto and high-flying tech stocks. Your dividend stocks, your REITs, those are all doing really well. Or not really well, but they're holding their own, right? So you just got to get through this. So what's going to happen here? Okay, so with the wealth effect coming out of the United States right now with this going on, and if this happens a few more weeks, the wealth effect will really have its balloon seriously deflated. Okay, so people thinking about starting businesses, changing jobs. They can quit without having a job. A lot of that's going to come to a halt. I mean, this great liquidity inflation here, asset inflation. Let's face it, the Great Resignation is a byproduct of that. That could have never happened without a massive wealth effect with housing values going up and asset prices going up in stocks and cryptocurrencies. Without that cushion, all of us would look at our wallet and our bank accounts and say, I got to stay in my job until I either find one I like, but just quitting and moving on and living off savings. We all know, it's just like, Murphy's Law. As soon as you quit your job, that market's going down. Okay. So that's why we all want to make sure we're making good decisions with our jobs, with our assets, taking profits when appropriate. If you're young and can let it ride, that's fine. But just please don't think this stuff is going up forever. It never does. Okay. So I just wanted to make a Friday afternoon video. We'll watch this a week from now to see if we can hold the support at 1430, or are we coming down to a leg down here, to get back. Like I said, if we follow this, even if we go to the tops, right? If we even watch the tops here, okay, that still puts us, coming in, somewhere at around 1393. So SPY down to 400 shouldn't be a surprise for any of us as we move through the next couple of weeks and months, and we get to see more what the Fed is going to do with their interest rates, and what earnings companies can report, especially the high-flying NASDAQ ones. We'll see what they do. All right, everybody, have a good weekend. Lots of good NFL football this weekend. I'll talk to everybody next week. Thank you very much.